Welcome back to another video, guys. My name is Brandon. I'm the founder and CEO at InventYou Strategy Consulting. So today we're gonna go over a sample profit and loss template, right? Funny story, I actually recorded a video of myself creating this entire template from scratch, and it actually turned out to be really blurry. So what I did was I decided we'll just go through this template and I'll show you guys how I came up with it and some of the formulas that are in there, right? So I'll walk you guys through our process of how we help our clients, right, solve their issues, whether it's maximizing revenue, reducing costs, or evaluating a new market opportunity or product. And we found that, these three issues are really the main issues our clients have when they're stuck or they're looking to expand. All right, so let's take a deep dive through our sample profit and loss forecast here. So first, we always start off with an input sheet, right? We want to make sure that we're able to think of every variable and input that goes into calculating revenue, calculating expenses, net income, every bucket you can think of, right? And additionally, each product is going to also have a different calculation to it, right? Different variables are going to go into different products. For this example, we're going to keep it pretty simple. We're going to say this person is selling a service, or they're selling a course, right? And so pretty much it's mainly the price multiplied by clients per month times the amount of months in a year. That's going to get you the total revenue for that product each year. Now, in later videos, we're going to go through even more in-depth business plan, financial forecasts, and you'll see how we evaluate different inputs for different revenue streams. So you got to check out our other videos. So let's go through this. All right, so now we have our total revenue. We summed that pretty much. So this is the formula, right, guys? So we summed it. It's about $83,000 for the year. Now our cost of goods sold. All right, so this service, let's say these two are services, right? And they're actually having to hire somebody, right? Because now the company is growing and they need to scale. So in scaling, they'll hire folks. So they're charging $100 for the service, but they're paying out $40 to a contractor to perform the service for the client, right? So there's a margin of $60 there. Now, and like you can see, I kept the amount of clients consistent. Each of these products align with a certain expense line item, right? As it should be. So let's go through this. So these two are services. They're actually performing the services. It can be bookkeeping, it can be creating a business plan or a pitch deck, right? But these two are services here. And you can see there's a cost associated with earning this amount of revenue, right? So the cost for line item 1 is $2,400. The cost for line item 2 is $24,000. Now, product 1, or line item number 3 and line item number 4 are actually courses, right? And so there's no hosting fees. Pretty much it's just a percentage that you pay to the company for putting your product online, right? So let's say Gumroad, for instance, right? You don't actually have to pay to go on that website to post your products on that website, but you actually, pay a percentage, or a percentage is paid to the company when a client purchases your product, right? When they purchase your course on Gumroad, right? So it's not necessarily something you're paying up front. It's more so something the client is paying on your behalf, right? So we're going to say there's zero really cost of goods sold there, right? And now pretty much there's zero expense for it, right? Okay. So operating expenses. So here are some typical operating expenses, right? And this is like textbook accounting, guys. So sorry for the monotony here, but just really bear with me. It's going to be really cool. So check this out. General and administrative expenses, your insurance, payroll taxes, rent, research and development, salaries and wages, sales and marketing, utilities, and other. All right. So we threw some random operating expenses in there, and typically, this will be tailored to your business, specifically if we were creating your financial forecast. For this example, it's obviously a sample, so we're throwing in some random line items. All right, and here are the prices, as you can see, actually, we should actually do this and just make it a little bit easier for folks to understand what's going on. So these are all prices, right? And now we've added the dollar sign to them. All right, great. So we're going to annualize these by multiplying them by 12. And this is pretty much how we get the total expense for each line item. Now we're going to go down to the non-operating income and expenses, right? And so let's say they have interest revenue of $100, interest expense of $30, right? Maybe they sold some assets. They got $250 out of it, but they had a loss on one of those assets. What if they took a loss on the asset, right? Or another asset? And so that's $120 that's coming out, right? Depreciation and amortization, they're depreciating. Those assets may have depreciated, and so they're capturing that depreciation here. All right, once again, we're going to annualize that, and this is pretty much the total. Now, another thing here, we want to also calculate the total operating expenses. So we're going to sum this, right? This is a simple formula. All right, now total COGS, we want to also sum this. We want to make sure this is complete here, right? So we're going to sum that. Total revenue is actually over here, right? And so, right, all right, so your total cost of goods sold, $60 per product, right? Now the total actual cost of goods sold is $26,400. All right, guys, see how that works? So your operating expenses are down here, right? And that's how much it is. But what you're going to do, you're going to take the annualized amount. So once you take the annualized amount, you'll take this here, you'll sum this, right? And so now your operating income, if we go right here, we're going to really subtract all this, right? So we have our total expenses. We're going to subtract, what we're actually going to do, we're going to put in the gross profit here, right? So this is gross profit. And now we're going to take this 83,000, subtract it by $26,400. And so our gross profit is actually over here, right, guys? So here's your gross profit. All right, here's your gross profit. Let's make this stand out a little bit more. All right, there we go. Now we're going to go down to the operating expenses, right? So we have the total operating expenses of $5.6 thousand. All right. So your operating income, once you subtract it from your gross profit minus the gross expenses, right? That's going to get you your operating income. All right. Now you're going to take your non-operating income, right? And once again, this isn't the final profit and loss, right? This is simply an input sheet. All right, guys? So all this information is here for us to be able to change, all right? Because what we're actually going to do, we're going to make it flow through onto here. All right, now you see how that works, right? And this looks more like an income statement, right, guys? So you're going to have the each product line, right? The revenue flows through from the input sheet, as you can see in the formula bar, right here. So then you tally up your total revenue. You have total cost of goods sold, right? That's tallied up right there. Your gross profit, right? And you saw that on the other page. And you have your actual operating expenses here. Now, total operating expenses is $5.6 thousand, like we saw. You have your operating income of $50.9 thousand, right? Now, you're going to subtract, to get your pre-tax income, you're going to subtract your operating income from your non-operating income or expenses, all right? And so now that's going to leave us with $48.6 thousand. The income tax expense is about $9.7 thousand. And as you can see in the formula, we multiplied the pre-tax income by the actual tax rate of 20%. Now, these are highlighted yellow because you can change these and they'll have significant impact on the financials. All right, guys? I've added some notes here as well to kind of guide you as to why you would change these, right? What type of assumptions you would want to make using these percentages. All right, so now after taxes, the company's taking home $38,900. All right, not bad. All right, so you guys can use this template in your business. You can plug and play your specific service line, right? Your particular product, whatever you have, and you can put it in, right? And here's the inputs. Everything is really going to be edited from the input screen. You don't really want to touch the formulas here because they're all coded, okay? So unless you change the input screen and you move a few things around, you should be fine to use this quick template to start looking at your business. You can feel free to add in extra lines like this, right? And that'll also help you, make it as specific to your business as possible. This is going to be a sum. All right, so what I'm going to do, I'm going to actually increase that for you guys. All right, so whenever you're adding lines, you want to make sure the formulas are capturing those additional lines that you just created. All right, fair enough, guys. So feel free to go through this. It's attached below. You can feel free to click the link. It will take you to Gumroad. You guys can feel free to purchase, share, and feel free to subscribe, like, and share with your friends our platform. Once again, my name is Brandon, the founder and CEO at InventYou Strategy Consulting. We specialize in business plans and financial forecasts. Feel free to reach out with the links below. Subscribe, like, comment, and share with a friend. Until next time.